Madhusudan Kela of Reliance Capital joins us now. Madhu, it's been a heck of a day. It's been a crazy day. Yeah. How real are the fears?
I think the markets have reacted a little more than what one would have expected because no one was prepared for this event. Till yesterday, everyone thought that this is not happening, and markets to a large extent have discounted. The pound, which is the main indicator, had gone to 150, which was virtually a high point in the last few months. So to that extent, the reactions are even more. But what I would like to say, Nikunj, there are two things. One, how the real impact is going to be will depend on what other countries also going for referendum. If the other countries start speaking, and if there is a danger for the euro to disintegrate, then obviously I think these are very early days for the markets in that sense. So I would like to wait and watch over the next couple of weeks as to what is the demand or what is the verdict which is coming from other participative euro countries. That is point number one. Point number two, markets have today proven that how insulated India is. Do not look at the equity market reaction. Look at the way currency is. Vis-a-vis what has happened to currencies of other parts of the world, Indian rupee relatively has been rock solid. Look at what has happened to 10-year bond. It is still 7.49. So there is no real outflow. So whatever, if this event gets contended to only Britain, then I think India will come out fine. But if it gets spread to other countries, then of course we will have to assess the situation.
What I want to understand from you is that, do you think globally now there could be a patch of risk-off trade? Historically, we've seen that whenever global crisis or global turmoil has happened, whether it was Greece last year when we talked about Brexit, or whether there was this problem about pigs, markets slip into a nervous mode, what is called as a risk-off mode. Can we slip into that now?
I don't think that is yet that kind of event which you are talking of, Lehman Brothers and all. I cannot see that as of now. If it spreads, as I'm saying, to the other countries, then we'll have to assess that. And which countries are participating, where the referendums are happening, we'll have to assess that. In the immediate short term, I think you will see a very good coordinated action from central banks because, for you and me, it is watching the market couple of 100 points. For them, it is life and death. So I would say that, how a Japanese government, how a Japanese central bank is going to react to yen below 100, and how the European England central bank is going to react to a GBP at 132. You will see, and central bank coordinated action means more liquidity, which is in the way short-term positive for the markets. And that I think should happen in the next 24 to 36 hours.
At a global level, can I safely assume that Fed is not going to increase rates, so at least that risk is also off the table?
It looks like. In this environment, for them to come and increase interest rate will be a real braveheart. I don't think that is likely. So at least for 2016 and this year, at least till December, I would put a very low probability of rate increasing in the US also.
We don't know how the global growth would move, and we don't know what will happen to European Union. I think this would be a debatable point, and I'm sure next time also when we meet, we would be debating and discussing that.
Absolutely.
But in the meantime, what we can discuss is that the recovery in Indian economy is quite real.
Sure.
Domestic cyclicals are doing better. The data is also indicating the economy is healing. So do you think now for an investor, this kind of a decline is like a godsend opportunity to buy some cyclical stocks and domestic stocks?
This is precisely what we were talking the other day. Any crisis actually has proven to be a buying opportunity for India because, as I said, India is, even today's markets are showing that we are relatively insulated as compared to what is happening in the world. So if the guy was not participated in equity or he has very low exposure to equity, these are the only chances. Now the question is that, do you go and buy in one day or do you spread over the next 10-15 days or SIP, whatever mode we adopt. But these kind of crises at least are proven as an opportunity for someone like me, and I would advise investors who have refrained from equity, have very low exposure, they should use this kind of crisis to put more money in.
Every time when crisis has happened in the past, the nature of outperformers and underperformer, it changes. And let me give you an example. Post 2013, the outperformance actually went towards IT, pharma and some consumer names. Yeah. Now we are talking about a global crisis, not a domestic crisis. 2013 was the India crisis. It was not a global crisis. Do you think now cyclicals and domestic related companies will start outperforming?
That is what my bet is. This is what exactly we said that the other day also, because they have been beaten down out of shape. One, there has been no return which is being made in cyclicals. And secondly, the tailwind is there. The economy is recovering, a lot of sectors are recovering. So there is a tailwind which is there for them. And these are under-owned companies. They have corrected both time-wise and price-wise very, very significantly. So I still believe things which have got to do with consumption and cyclical. These are the two major things to play for India.
So 3 months back when we would be discussing the Brexit event, do you think in hindsight, for those who've not participated in next 4-5 days on every decline, they would regret rather than...
Because I said that if it is limited to Brexit, then I would say yes. But if it spreads to other countries, which we have to see, then I think we'll have to make an assessment as to which countries are wanting to do more referendums and what is the real impact on euro is.
But if you have to, let's say, convert the market purely in Nifty terminology, what we saw just before budget was a level of sub 7,000 on the Nifty.
That's right.
Lot of problems they coincided together. China, debt, currency, commodities. Do you think something dire has to happen now for markets to retest the recent lows, or we can go there?
I don't think that in these kind of circumstances we can go there, and you are right to the extent of saying that if something really dire has to happen for us to go to and test those levels, because let's not forget that is 6 months back event. In the last 6 months earnings have caught up. So much has happened. Even let's say give credit to the government. Yes, they're doing so much. Yeah. We have seen so much cleanup, so much announcements on the FDI front last week. And I think now passage of GST bill also is in the horizon, at least what I am hearing and what I am gauging. So I think after all this, if you have to go back to 7,000, which means something really bad has to happen globally for us to go and test that.
So what is the silver lining in this fall? Because every story has to take, every coin has two sides. Apart from the fact that we can have cheaper holidays to Europe.
Silver lining is only you get to buy great companies again at 10%, 20%, 30% cheaper.
You've been very vocal, and you've been advising our viewers at all point in times that that India is the island of safety. The globally things are in a mess. We are the fastest growing economy. But do you think now that is getting more and more vindicated?
It is getting more and more validated. I would say not vindicated. It is getting more and more validated. And today's reaction, I am saying, do not look at Nifty. Look at bond, look at currency, and look at Nifty. And look at what has happened globally. It is clearly getting validated that India is a place for India is a place for investors, and we can expect more and more money. If these markets were to correct, I think more money will come.
You've seen even bigger and deeper crises in the past.
Yeah, of course.
2008, what happened after 9/11, sure. And those were far bigger and far reaching, both in terms of outcome and in terms of impact. So how do you hold your nerve?
Hold your nerve because you be convinced about what is the longer horizon. See, as long as we are investing in good companies, and as long as we have a horizon that we want to make money not in next 3 months, but we want to make money in the next 3 to 5 years, and if you have done your work well, then I think you get wiser by those events. And then in the early years of my fund management career, even I used to get very nervous. The fact that I am here and talking to you in the studio, I am not nervous because I have seen these things will come and go. As long as we have put our head and we have constructed our portfolio properly. So the only advice which I can give it to people that as you said, if it was only Brexit, it will not be even remembered after 3 months. And even this Brexit itself will take 2 years. Yes. It's not happening tomorrow morning. So it will not be remembered after 3 months. Only thing which will be remembered is that in this panic, did you actually went ahead and bought some good companies?
Like Buffett says, you should always buy fear and sell greed. Maybe exactly. It's one of those days you should be a buyer rather than running
the whole
from
point
fear.
Is that there is a world of difference between knowing what to do and actually doing it. And
that's why I'm an expert like you. Because you're a practitioner and I'm a commentator.
That is what is doing it. If you can take advantage, then these volatilities can be a great friend.
I'm just going to get some closing comments from you. I know you have a packed day ahead. Even though you will not be focusing on the screen, you got some other appointments.
Yeah.
The selling,
focusing on the screen.
the general selling which has been done today in some of these UK and Europe related companies, let's say it's a Tata Motors or the Madhusudan Kela or a TCS or Infosys, is that slightly overdone? It's not that Britishers would stop buying cars or they will stop importing IT software from India. Today it's sentiment.
It is not only sentiment because currency fluctuations of this order will definitely be gain and loss for some of these companies. So I'm not going to go company by company wise, but so some of this reaction could be on account of that. It's not whether they will buy the car or not. But what is the overall implication of this currency movement is what market may be discounting partially.
You always give me a watchword. You always tell me, watch this space. Last time you told me, watch out for select PSU banks when everybody was saying, let's write an obituary for PSU banks. And some PSU banks like SBI and BOB, they've done rather well. We talked about capital goods and construction companies a couple of years ago. So what would be that watch out space?
Watch list will be cyclicals, as I said, in a broader sense.
Yeah, of course.
Some compelling opportunities in the bank and the NBFC space. And I would still say that, there's one thing which can actually do well in that consumption theme. Because one thing again is that, because of all these global events, it's very difficult to emphasize now very big oil price rise. So can aviation be a sector? Because now government has opened up, the aviation sector. Can aviation be a space which might be exciting from an investor perspective over the next 6-12 months? As usual, you must say that, needless to say that there are a disclaimer, we have vested interest and you must consult your investment advisor before acting.
Last year, same time we were discussing Brexit. Today we are discussing Brexit. Next year we could be discussing something else. Something somewhere is always going wrong.
Yeah.
But eventually, where are markets headed on a 3-year view? And do you think from the starting point today, let's say 8,000, 8,100 is the starting point today, can this market give a CAGR return of about 10-11% in the next 3 years?
I would bet so. Otherwise, I wouldn't be in this business.
So why do you think 10-11%?
Because the earning growth itself is 15%. I think earning growth, even in spite of these events, will be 15% plus in India for this year. Maybe it will be higher next year. So if you have a 15-20% earning growth, you definitely expect a 10-11% return. But I don't know whether the return is going to come in Nifty. But in select companies which you buy diligently, that kind of return must be made.
But your message to our viewers and to your followers and to markets would be that today's panic is slightly overdone. If this does not become into a domino effect and it does not talk about breaking down of a European Union further, we would be remembering today's as one of the days when this market gave you one of the best buying opportunities.
I would not say one of the best buying opportunities because it's still down only 2-3%. But rest of it is right. That, if only it is Brexit and it does not spread to other countries, then I would say it will be a decent buying opportunity.
And India is safe. There is,
I would not worry about our country. You saw just now, you saw Governor Rajan talking that RBI was prepared. You saw the Finance Minister talking in the morning, Mr. Jayant Sinha. So I would say, from all perspective, government was in a way ready. And I think we are in a comfortable position to tackle this crisis.
And those who are talking about this is the worst which has happened to mankind after Second World War and this is a repeat of 2000. Rubbish it.
I don't think.
This is just an event, and when we would look back.
But caveat is we have to see it doesn't spread. Yeah.
I just wanted to hear that word from you that eventually markets you should always be fearful when others are you should always be fearful when others are greedy.
Yeah.
And you should always be greedy when others are fearful.
But I don't think Neko is not a spread. Let's not extend it to that extent. It's only a 2-3% fall. The world is not fallen. So if that kind of a reaction happens, I'll come back again.
So one of those bad days, and let's get over it.
Exactly.
Really appreciate your time. Thank you.
Thanks.
Thank you very much. Thank you very much.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.